Good evening and welcome to Money Matters. My name is Pat Welde with Merrill Lynch. My co-host this evening is Patricia Dunn, also with Merrill Lynch. Patricia, how are you?
Good to be here again.
Good to be with you. Well, we have a special guest this evening that will be joining us shortly, so you're going to want to stay tuned to Mr. Ted Leisenring, who's an energy consultant that can share some of his insights in the energy business. Pat, why don't we start talking about some of the common concerns that you and I may hear on a daily basis from clients. You know, one of the things that I continually hear about is the rising dollar. You know, and I know our program is taped, so obviously I always make sure our viewers know it airs at different times in different markets. So make sure you consult with your advisors before you act on anything we talk about. But the dollar has risen in the past 6 months a lot, relatively speaking. Mm-hmm. You know, what does that mean for investors?
Well, short term it means a lot of angst because investors are very skittish and worried that a rising dollar is going to hurt our economy. And in fact, some fear that it's going to hurt our economy before it starts lifting others' economies. Mm-hmm. But quite frankly, I think the angst is overdone.
Right.
Because we have enjoyed 30 years of a falling dollar. It is time. Pendulums always switch direction. It's going to go up. And there are some long-term benefits of a rising dollar that I think people are overlooking, particularly in the area of consumer spending.
Yeah, it is. I mean, believe me, when you say it's maybe overdone, I mean, that's the world we live in, isn't it? I mean, people will overreact to anything they can overreact to. It's a terrible time for a nervous investor, I would tell you, because there's lots of cross currents that are occurring at the same time.
Yes.
Another one that this one drives me crazy with the discussions about it and the timing of it, which quite frankly nobody knows. But how about with the pending Fed rate rise? The Fed's going to rise this week, next month, next quarter, and they're not going to rise. I mean, how about that tug of war?
Is it June? Is it September? Again, I think it's overblown.
Right.
When it does happen, it's going to be a gradual thing. Mm-hmm. And again, the basic investor fear is that our economic growth is going to falter.
Right.
And investors seem to have this feeling that we're skating on thin ice, but we're not. And as these rates go up, it's not going to be because the Fed wants to hold down inflation. We've had low inflation now for quite some time.
Yeah.
I think it's more of an acknowledgement of the fact that the economy is doing better and that we no longer have to have these experimental monetary policies where we're artificially keeping interest rates so low in order to stimulate the economy, except the fact that the economy is indeed picking up.
Right. And
in the long run, it's going to benefit investors, particularly investors who invest in equity.
Yeah, no, I think when you said, the why, and I get the why, believe me. I know we're saying people are overreacting, but I mean, the why is, that famous, credo that people believe in, which is not, you can't discount it, but when they say don't fight the Fed, meaning when Fed's cutting rates, you want to own stocks, and when Fed's rising rates, you don't want to. And I think you have to be careful with that generality of, especially in this instance when rates are at 0.
That's right.
I mean, we're not raising rates from 4 to 7. If they raise rates a quarter of a point 8 times, we'll be at 2. I mean, so you really got to be careful using the next phrase I'm going to use. This time's different. But I would definitely agree that there's a whole lot of concern that needn't be, quite frankly. Especially if in fact they're raising rates for the right reason, that the economy is getting better. Well, isn't that a good thing?
It's exactly a good thing.
Yeah.
And from the investor's point of view, I'm sure you've told your clients this, the best way to avoid a punch is not be there.
Right.
And conversely, if you know the wave is coming, you'd better be in the water so you can catch the wave. So as these rates go up, it's going to hurt bond investors, and ultimately it's going to help stock investors, equity investors.
Well, that leads me into my next question. With what we've talked about the dollar and about pending rate rise, where do you go? Stocks or bonds, and why? And I think you're jumping into that.
I'm right there.
Yeah.
If you look at across the United States right now, investors are primarily in bonds, percentage-wise, and very low ownership of individual stocks.
Historically speaking, right?
Historically speaking.
Yes.
And as interest rates rise and the value of those bonds goes down, money gets into motion.
Yes.
And that money is going to leave bonds because people will not be happy with their returns.
Yeah.
And then where's it going to go?
Yeah.
It's not going to go into commodities because we've already talked about how oil prices are dropping, commodity prices are dropping.
Right.
So it's going to go into stock. So I try to position my clients to where the money is going to be. If you can be there first,
Yeah.
you will catch that wave.
Right. Yeah, I have some real concerns about, the bond world. I mean, we've seen all the numbers as far as the flow of funds and literally how many, how many trillions of dollars have gone into bonds in the past 7 years.
It's scary.
Including the last 3, where we've had some fantastic stock markets, yet people are not, which is why, believe me, people say, well, it's been a long time since we've had a big correction. We're going to have one because we haven't had one. I don't buy into that because I got to tell you, this is the most non-believing bull market I've ever seen. I mean, nobody believes it. Everybody's waiting for it all to burst in a minute, and they're talking about how crazy expensive things are, which I got to tell you, expensive is measurable, and this is not expensive.
Exactly.
It's not cheap. I'm not telling anybody it's cheap. It was cheap 4 years ago. But this is not anything I think to be concerned about, especially if you're diversified.
If you're diversified and if you're patient.
Yeah.
Because as we make this shift, any major shift in the market, as you know, is accompanied by high volatility. So it's not for the faint of heart.
Right.
And initially, when interest rates start to move up, I believe you're going to see a downward trend in the stock market, and people are going to go, well, why was I there? And my answer is be patient.
Right. Or have some cash to take advantage of it.
And have some cash to take advantage of it, because ultimately it will self-correct and the equity market will rise as the bond market falls.
Wonderful. You have time for a question from one of our viewers?
Sure do.
I have a question from Paul from Westchester, who asks, what is the best way for someone late to the game to save for retirement?
Paul, I would say the best way to save for retirement if you're late to the game is if you qualify to get a Roth account. Now I say if you qualify, there are income restrictions on that.
Right.
If you're married and filing your taxes jointly, you're looking at a modified adjusted gross income, which means after deductions of $193,000 or less. If you're a single individual, that number is $131,000 or less. So if you fall in that window, and chances are, if you are in that window, you haven't had a lot of excess cash to be preparing for retirement.
Right.
So take advantage of the Roth account. And why? 3 reasons. Number 1, whenever you're saving for your future, you're best investing in yourself first. Pay yourself first. Putting money in a Roth account is moving money from the left pocket to the right pocket, but it's still your pocket. And secondly, you will minimize future taxes because money taken out of a Roth at the proper time comes out tax-free. And thirdly, it's a means of maintaining your liquidity, because as long as you have the Roth account for 5 years, if an emergency should come up, even if you're not 59 and a half, you are allowed to take out your original investment. Not the earnings,
Right.
but the original investment. So for pay yourself first and maximizing or minimizing future taxes, and then finally giving yourself a liquidity loophole, I say do the Roth.
Paul, hope that was helpful. If viewers have questions, we love to hear from you, and here's how you can actually get questions to us to address on the air.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click click on the banner on the right that says Send Us Your Questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Well, thank you and welcome back. As I said earlier, we have a special guest tonight who's going to talk to us about what I think is one of the most dynamic areas in our investment world for many years, quite frankly, in the past and probably many years in the future, and that's what's happening in energy. So I'd like to introduce Mr. Ted Leisenring. Ted, how are you? Welcome to the program.
Thank you very much, Pat and Patricia.
Welcome.
Thank you for inviting me.
Why don't we start, and why don't you give our viewers a little taste of when I say you're an energy expert, talk to us a little about your background in the energy world.
Well, I started in the energy business back in the 80s working for a coal company in Philadelphia called Westmoreland Coal Company. And back then, coal was still king, as they say.
Yes.
There have been a lot of changes, and I've since left the coal industry, but I've also worked in the alternative energy industry and also in the gas industry. So my background is grounded in coal, oil, and gas. But more recently, I'm working as a consultant for the Department of Energy. Would you like me to elaborate a little on that?
Yeah, tell us about that.
And interestingly, even though it's kind of known that this administration is anti-coal or trying to move us away from it, that's not a secret. The Obama administration has earmarked or allotted money to help the United States find rare earth elements. On a recent 60 Minutes episode or segment, they talked about rare earth elements. Are you familiar with what they are?
What I'm familiar with is that the rare element stocks had a crazy, bizarre period about 2 years ago, and they all went up 30-fold, and then they all came crashing down. So, but what they are, I'm not. I'd love to be educated.
And I know they're very important to the iPads and iPhones, but that's all I know.
They are. And that 60 Minute segment, if anybody wants to go back and look at it, is fascinating. It tells the story very well. But in a nutshell, it's rare earth elements are these things at the bottom of the elemental table critical to making batteries, electronic components, weapons. And so they're integral in our manufacturing. China has the market. They have not only the reserves of the elements, but the ability to refine them. We have one mine in the United States, which is out between California and Nevada, very problematic. It's had a lot of environmental issues. We need to find alternate sources. So
that's the only mine in the United
one
States?
Mine, one operation.
And China has...
And you can invest in it, by the way. Its stock is trading for about 50 cents.
Okay.
And I don't know if they'll last long. Right. Anyways, they're called Moly Corp, and that's the name.
Sure.
And you might have seen that name.
Yeah.
So we're on a quest. The United States government and the DOE wants to help us find these elements. They exist naturally throughout our country, but in what concentration? That's the key. In the years that we've mined coal, we've disturbed a lot of land. It's no secret. And in those disturbed land, we've turned over a lot of rock. We want to find if there are locations in this coal, rock, and refuse where we can find a high enough concentration of rare earth elements to concentrate them. So I'm working with the DOE and people in the coal industry right now to potentially locate those supplies of rare earth elements.
Okay.
So you're using basically the leftover excess product now will get recycled for another use.
If we can find the rare earth elements in them, absolutely. That's the objective.
Well, let's switch gears here a little bit. Talk to me about how the government's policies are affecting the power industry.
Well, that's a good question. I think the two major areas of regulation have been in renewable energy, and that's been ongoing for the last 20 years, 10 to 20 years. And more recently, air regulations. And when I say air, I mean elements like mercury, sulfur, and CO2, that's the big gorilla.
Right.
In the renewable area, we've led, and I think it's not well known, we've led the world, and we lead the world in the production of renewable energy. Wind power, we are number one, and we have been for the last 5 years. And we continue to install more renewable power than any other country in the world. You wouldn't know it by listening to the press.
Right.
But it's a great story. Wind power is the number one, solar power is the next. So we've done a good job with that. And
Now, when I think of wind power, I simply think of what I've seen, like typically in Texas, where there's these acres and acres and acres of these wind farms.
Right.
But is it just there, or are there other windmills that I'm just not aware of?
The Texas is a good location, and T. Boone Pickens was on a
Yeah,
big
that's-
was on a
Right.
big thing. T. Boone Pickens should stick to gas. Quite frankly, he doesn't know wind. He puts out a lot of it.
Yeah.
Anyways, the wind corridor is really from North Dakota down through the central United States. North Dakota is the windiest state in our union. Unfortunately, we don't have the infrastructure grid when you put up the wind turbines to pull the energy out. But in terms of wind, the central United States, North Dakota, and Texas, that's the wind corridor. I guess my point is, I think we've done a really good job, and I don't think that, personally, my opinion, we should push too hard to go too far with renewable energy. The second area of regulation, and I think our government is continuing to push on that button. I'd like to say check the box.
Right.
Let's move on.
Right.
The other area, which is more in the news recently, are on emissions. And we have regulations that have done a good job of regulating these elements that are not healthful, such as mercury and sulfur dioxide. We've done a good job in that area. We've put scrubbers on a lot of our coal plants. And more recently, a lot of our coal production is being shut down. There's a gentleman who's big in the news lately, Bob Murray, and he's been on his soapbox saying that coal has gone from 57% of total power generation to 37%. It's market driven, most of it. Part of it's regulation, but there's cheaper gas. We're headed in that direction. But now the government wants to, in my opinion, they want to kill the coal industry by using CO2 regulations. If you say you can't emit CO2, well, you're going to have a hard time burning coal to do that.
Yeah.
The other, I don't think enough publicized fact is this: when we went from 37% coal generation, from 57 to 37,
Down to 37, right.
we have cut our CO2 emissions by 50%. A coal plant puts out, let's say they put out 100 tons of CO2. A gas plant, which is which replaces coal, puts out 50 tons, 50% less CO2. So our needle has come all the way over toward the green side.
Right.
And it's a great story. It's not being told. So that's my take on regulation and where we are. It's a good story.
Right. How about what we keep hearing about, and we can see it certainly in the price of natural gas, the abundance that we have now. All this new oil and all the new natural gas, which I'm assuming, it's not like we just found this yard that was there. Nobody knew it was there. It was all these new drilling techniques that we now can get more than we could before, in easier fashions in an affordable way. How has all this new oil and gas affected our economy and affected the energy industry?
Well, I think it's all positive. I mean, we've come from $100 a barrel oil, and we've come from $12 per 1,000 cubic feet of gas to $2.
Right.
So that's a lot more. I mean, the drop in the price of gas is much more significant. And we can use gas to do a lot of things. I mean, we can use gas to run cars, buses, heat our homes, make electricity. So fracking, I don't like the word. It just sounds bad.
No, it does.
It does. But it's the technology. The gentleman who really came up with it was I believe he was from Oklahoma. He recently passed away. George Mitchell is his name. He perfected this, and then the oil companies did. It's a great thing.
I think everybody's heard of it. What is fracking?
Well, fracking is when,
to our viewers,
before you just suck a hole down in the ground and like a straw and suck the oil and gas out.
Right.
Fracking, they learned how to take a drill bit, run it all the way down, and then turn it at 90 degrees and run it out 5,000 feet, a mile. And so now you have a much longer hole through the bed of rock. That was step one. Step two then is using water and air and a mixture of some chemicals, not necessarily nasty ones.
Right. And sand, right?
And sand, thank you. And sand to push down there, and it opens up the rock and brings it out. It works the same way on oil as it does on gas, and frequently the two are located together. So that's what changed everything. And it's in my opinion, it's one of the best things. I'm a coal guy,
Yeah, right.
but it's what needed to happen. It's made our economy, making our economy hum.
Oh, it's a real game changer for the United States economy, going from being energy dependent to energy sufficient to someday being an energy exporter. It's our grandchildren will reap the benefits of this.
But I want to ask you guys a question, because the stock market, stock analysts, they worry about low oil prices.
Right.
Why do we hear that spin? I mean, is there a negative part to oil being $40 or $30 a barrel?
I think the answer to that, and we've actually addressed it on this program, the first answer is, well, why did oil drop in half? Because again, it didn't drop in half because all of a sudden there's a lot more oil. So it wasn't what you hope, supply and demand driven. But the fear is that the energy markets, the gurus, they see something out there, and oil demand is going to decline, which is what's brought it down. Again, we'll see, but that's the fear is, well, why did it drop? It's not really about supply and demand. You would know the supply and demand numbers; they have not materially changed that much, certainly on the demand side. But the fear is that demand is going to drop, and if that were to be, that wouldn't be good for the stock market. But we agree. There's a lot of really good stuff with $50. I mean, I'll use an example. There's a lot of brown and blue trucks out there. I don't want to use any names, but there's brown trucks and blue trucks that deliver a lot of stuff. So if you don't think $50 barrel oil, because all those trucks have to have something driving them, whether it's gas or or motor, oil, gasoline, or that's great for those companies, and it's going to allow them to deliver more product to people much cheaper.
These lower commodity prices, particularly in energy, is actually an economic stimulus, not just here but worldwide.
Yeah. Unless again, it is a forebearer of weakness, which we don't believe it is. But to answer your question, that's the fear.
I'm glad to hear that. That's good.
That's the fear.
Well, now let's put the coin on the other side. With this abundance of oil and gas and the cheap prices, what kind of impact do you see this having on the renewable energy market? Do you see we don't need wind and solar anymore because gas and oil is so cheap? Do you think it's going to hold them back?
I don't. And there are, I think, two parts to it. And one is controlled by our government, and that is the subsidies that go with it.
Right.
And they can take those, they can take them away and put them back with a pen stroke. The second are renewable portfolio standards that were already voted on and agreed upon, that utilities still have to comply with a certain percentage of their portfolio must be renewable. So that they're working on getting that mix done, and if the credits are there, so I think the renewable market is going to continue to grow, and it should grow. I mean, but I really love to see things work in a fair market and be market driven. Mm-hmm. And so some things need a subsidy, but don't over-subsidize.
Right. So how about a hot topic that you'll hear, and it's very controversial at times, but with all that's happening in the energy world and some of the policies that are driving some of that, what are the impacts on global warming?
That's a really good question. And global warming is just
it's a big topic, and a lot of people use it and what it is.
So but let me go back to what I said before, and that is, I think we in the United States, let's talk about what we're doing. And with market-driven metrics, and I mentioned it, turning off coal plants, a lot of them, and putting on gas, we're moving our needle in the right direction.
Per the 50% reduction in emission.
In a big way. Right. And we're also saving more with more efficient light bulbs and so forth, energy savings. I think we're doing what we're supposed to be doing. It's going to be hard for us to force the Indias and the Chinas and the growing nations to do their part, but I think we can. I think we should take more credit for what we're doing. And
in layman's terms, because I'm going to tell you, there's a lot of people that have no idea what even global warming is. In layman's terms, what is global warming?
You know, I'm not a climate expert. I'm not going to say, but I say people say that global warming is the rising temperatures, and
Right.
they attribute it to CO2. And I don't think there's any secret that those two things are linked.
Okay.
You know, the debate is, are they man-made or not? But the fact is that we are reducing our CO2 output. So
Right.
we're doing our
What we
part.
can.
And I don't know of other countries that are, I don't think there are other countries of our size, in
Right,
China,
right.
US and India, that are doing what we're doing.
All right.
Well, now, Ted, I'm going to put you in the hot seat.
Oh, good.
All right. Where would you invest in the energy business today?
Well, I'm sorry to say this, but I wouldn't put my money in coal stocks. And
Yeah.
No,
you
I
guys
agree.
probably know the Peabodys, there's Peabody, there's Arch, there's Alpha, are some large corporations. Unfortunately, these big corporations bet wrong. They took on
Right.
a lot of debt, and now the drop in the demand for thermal coal is really crushing them. So I wouldn't put it in coal. In terms of gas and oil, maybe since you're seeing corrections that have happened because of what we talked about, oil going from $100 to $50 a barrel.
Yeah.
Maybe I'd like to turn the question back to you.
Yeah.
I'd say in terms of energy, not in the utilities, not in the coal, but what are the good companies to buy in the oil business? Do you have any that you like?
Not right now. Energy is an area that I'm avoiding because I believe in the philosophy the best way to avoid a punch is not be there.
Not either. Okay.
Yeah, well,
Fair enough.
I would tell you our research is being very selective. You know, where we are, saying this is not the time to be a cowboy and try to be heroic.
Right.
We're recommending to stay in the biggest, the largest, the household names. Many of which certainly at these prices are paying well above average dividends. And the question, and what investors obviously need to be very well aware of, a dividend is good, but it can change.
Right.
And so you have to be careful. Is the dividend sustainable? And the answer to that, on the large ones, temporarily, absolutely. And they actually can. There are some companies that will pay out more in dividends. Some of these large integrated oil companies, multinationals, they'll pay out more in dividends in 2015 than they'll earn. A common person would say, how do they do that?
Yeah.
Well, they can do it. They have reserves to do it. They have a balance sheet that they can do it. But you can't do that forever, or you're going to be one of the coal companies, which is facing some challenges. But there's a big tug of war. There's a tug of war between, oil now that's at 50 or so. Is it going back to 70, or there's some smart people who say, no, it's going to 30.
Right.
And I don't know. Nobody knows, quite frankly. I can tell you at 30, you don't want to own much in the energy area, if that side's right. So, well, I thought this was terrific. I mean, we appreciate your knowledge of the broad-based knowledge, starting in the coal and what's happening in the renewable energy. I thought it was terrific. Hopefully, our viewers did as well. So maybe we'll get you to come back sometime when we get the answer to that 70 or 30 first. We'll bring you back and we can talk through it.
Thank you.
So,
thank you, Pat.
Our next guest actually will tie in very nicely with what we talked about. Our next guest is Mr. Michael O'Neill, who's the CEO of Preferred Sands, which is actually a company that actually they own sand pits, enormous sand pits, and they're supplying the sand that they're used for fracking. So it's a very interesting story. You'll want to hear Mike's story. He's a terrific man, and he'll tie into our energy story. So with that, we thank you for your time, and as always, your money matters. Thanks for being with us tonight.